Welcome back to Season 2 of Inside the Vault, Enterprise Bank's podcast series. As you know, education and awareness of issues affecting the small business community is an important part of the bank's relationship and consulting-oriented approach with its clients. If you enjoyed today's episode, please be sure to review and rate us on all of your popular podcast platforms. And as always, if you have any questions, comments, or suggestions, please email us at insidethevault@enterprisebankpgh.com. Welcome back to Inside the Vault, where we discuss current issues affecting small business clients, which is a primary clientele for our Enterprise Bank. I'm happy to have back with us again Chuck Leyh, President and CEO of the bank here at Enterprise. Welcome back, Chuck. And you and I talked almost a year ago as we were starting to come out of the worst of the pandemic about what the future held in terms of inflation and economic activity. And at that time, our leadership was talking about any inflation would be transitory or temporary at that point. Well, now we're a year later, and we've obviously seen inflation take a pretty strong hold on the economy. But before we talk about kind of what the dynamics are currently, I thought it might make sense just to give our listeners kind of a little bit of an education on what drives inflation from a supply-demand perspective and what different factors play into what the inflation rate is or what the trends are.
Well, obviously the economy is very complex with a lot of different components to it, but in the simplistic terms, inflation shows itself, prices adjust based upon supply and demand. I mean, the simplest terms are when supply is greater than demand, prices fall. And when the demand is greater than the supply, prices are driven up. And that's the basic premise, and then it plays itself out in so many of the different components of the economy. You know, a year ago, we were discussing and had concerns about inflation being a very serious factor, before the Fed and other people were talking about things, or to the extent they were talking about it, they were discussing it as being transitory. But we were seeing in the banking industry more cash sitting in our institutions than we'd ever seen in 25 years. The government programs, the slowdown of the economy, people moving their savings, there was more money in the financial institutions than we'd ever seen before.
I read some recent statistics that the estimates are $2.5 trillion in additional savings was generated during the pandemic from government stimulus.
Yeah, and normally when you go through a slowdown in business, a recession, in this case, we went through that type of thing because of the government shutting down the businesses because of COVID. You see people using their savings to survive and adjusting their lifestyles. That didn't happen here. I mean, people were actually building their savings during a period, and that's what caused us to have concern. We were having people having more cash available to spend, now more time available to spend because they weren't working, and so all the kind of things were directing that pushing that the demand was going to go and move. And it did. When the doors opened and the stores could open, things started to go really, really strong. And at the same time, with COVID, we had some supply issues and supply chain issues when factories would shut down or this type of thing, or slow down because of labor issues. And keep in mind, it's an international market, so you've got a lot of this. It's not just the United States. It was what was going on in Asia and those countries that are strong exporters into the United States. They were shutting down plants and taking a whole different approach than we were in many cases. And so you had a whole bunch of factors come together to where they were all driving.
So it was both sides of the equation.
Yeah.
Demand was going up and supply was
Going down.
Was going down.
And so you had some strong shocks to the system, and I'm not quite sure what the logic was of transitory. Transitory would make sense if you were looking at maybe one of those factors. You know, if you thought COVID was going to be a short period of time, yeah, you know, to me, transitory shows itself like you'll see us. We go through a strong winter, and when you get a really bad winter where we got lots of storms, people stay inside, they don't buy. And so you have numbers are affected, unemployment or the economy drops, and you know it's temporary because as soon as people get out, they're shopping again and they're moving, and there's a pent up demand that comes out, and so you start to see blips in the system and transitory changes that are temporary, you know, temporary adjustments. But when you have the amount of money that we had, pushed out there, where people had a lot of money, and they had the time and the ability to spend it.
Yeah.
You had some pretty strong factors that were saying this isn't just a couple of months till the factories get going again. And then the other part of it is COVID had its stage 2 and stage 3, and that continued to affect the supply side to some extent. Instead of making a short blip, it became a much longer blip. And again, you put all these factors together, and you created one serious problem. And in conjunction with the Fed, it's a different group today than what it was 25 years ago. You know, 25 or 30 years ago, we saw inflation come about in the 70s and really show itself in the 80s. So you had people like, say, Alan Greenspan, that were the head of the Fed at the time, who grew up with that inflation, who were managing during those inflationary sectors. And you would see him, when he managed, really put the brakes on hard to stop it from kicking in. And then he pushed the accelerator hard, too,
Right.
when he needed to. The group that's been in here since Bernanke came in, you know, they haven't lived in a high inflationary period. They haven't managed in a high inflationary period. And I think politics is more involved today than what it was then. Not to say that they're not independent, they are, but there's some influences because they're appointed by politicians and what have you. And so you got to, you know, with Mrs. Yellen, and you've got Chairman Powell now, they're not as aggressive as an Alan Greenspan, so they're sitting back. And so if you were an Alan Greenspan, he would have put the brakes on hard and fast in the summer when it started to show itself. They've done nothing for close to a year, and now, you know, they have a much different mindset. Alan Greenspan would hit it hard, put their brakes on hard, didn't necessarily give the markets notice or anything like that. There's a different mindset now. They want to give lots of notice. They want to be very open. People know what they're thinking. And you couple that with not managing this type of situation or have experience with it, and a concern about giving people warnings, and you get all the different cultural mindset. Well, now they don't put the brakes on hard. And before they do put the brakes on hard, they're going to give a lot of notice. And so it's a whole different environment, and that's promoted inflation too, because of the way they've reacted in a much different way than the people that learned to deal with it, tamed inflation and kept it in check when it was really showing itself.
Yeah, to add some color to what you said a few minutes ago, you know, on the demand side, I found it interesting that, you know, consumption of consumer goods last year was actually higher than pre-pandemic. So it was almost a self-defeating prophecy that when you create that much additional demand, that supply is reduced just based on those two variables.
Well, if you remember back in the Obama administration, they were talking people into GDP. 2% growth was what you should expect. It's the new norm. Then President Trump came in and we changed some dynamics, some more business oriented, and that GDP doubled. And so that was kicking in right now. So the demand changed a lot because of our business policies changing with the administration.
Yeah. So, you know, the question remains right now is how long do we expect to be in this inflationary period? And what needs to happen to remedy it?
Well, there again, supply or demand are going to adjust, okay? The Fed can push rates up hard, which will make expansion more expensive, which will pull down demand. If supply reacts, the supply chains are adjusted to fill the demand, that also will be a part of things. And each of these different components, you know, there's how many microcosms of that push, whether we're talking energy or food or housing or all these things come together, and you've got that supply demand, and each one of these things and different components working it. So the broad adjustments are going to be the Fed putting the brakes on hard.
You know, Chuck, one of the things I find really interesting about, you know, this current inflation issue and the consumer response is, you know, you and I are in the financial industry every day, and these numbers, these inflation numbers are dramatic to us, but it just seems like the American public has not really pushed back or really, you know, responded to a lot of this inflation. And I think it goes back to what you said, that a lot of them have still substantial savings, so they're willing to pay the higher prices, but at some point that's going to run out. The one thing though that I think everybody's feeling the pinch of, and you hear with everybody you talk to, is this issue with gas prices and energy prices as a whole. And I know that, you know, over the years, you've been of the mindset that energy prices really kind of drive the economy in a lot of ways. Can you give us a little more of a kind of understanding of why we're in the energy situation we're in, and what that might be doing to the economy as a whole?
Well, I would say the energy situation is again another microcosm of supply and demand. And COVID reduced demand dramatically. Supply is what it was there, and so prices dropped dramatically. Now you've got COVID going by the wayside. You've got the petroleum exporting countries not wanting to see the supply raise a lot, so they put caps on. And so what's happened is demand is now caught up and surpassed the supply, so prices are starting to push back up again. You know, in this country, we shut down a lot of wells, and the current administration is very anti-carbon, you know, energy forms, and so you put all those factors together, they have basically reduced the supply artificially, and the demand is now creeping back up again. And when that happens, prices start to move, and they have been moving dramatically.
So it's not just the today's topic in the headlines of the Ukraine-Russian conflict.
No, that's a part of it. I mean, the Russians were involved with working with the OPEC countries to try to cap supply, but they're kind of an immaterial part for our country. Now, it's a global market, so there is an effect there. But you know, we have the ability in this country to more than generate our own production to overcome what the Russians can do.
Mm-hmm.
But we choose not to allow it to take place. Now, outwardly people say, oh, there's plenty of leases left to go, and you can drill if you want to. The truth of the matter is pipelines are shut down, so transportation isn't where it should be. You're not pulling transportation as ineffective, as efficiently as you can from Canada down to like Texas if the pipeline was done. Now it has to come on rail cars and it's slower. Just the price of fuel when it gets back up is moved, so it's now profitable to do drilling. And the federal government has cut back on some leases that are very good leases. The ones that are left that they're all talking about, there's plenty of undrilled leases, are not the most profitable ones, so it's more expensive to get, the price of product has to go higher
Right.
before it makes sense to drill there. I mean, all these factors work together. The truth of the matter is, this administration's pushed it by the side, said, I don't want the supply, I don't want it being used, and then that's contributed to the overall increase. If they reverse their position in 6 months, we could make a huge difference. The American industry can adjust very quickly and very fast if people are honest and truthful and really do open up the opportunities to do it. And all these things have national or international, effects. Even in the war, you see, it's funny how you see the people critiquing the Germans because they're not as proactive in the NATO group of helping as others. Well, Germany heats itself with Russian
oil.
gas. If the Americans could come in and say, well, our pipelines are done, we'll liquefy the gas and shoot it to you, you don't need the Russians, they take a whole different outlook on what they're doing. You have to look behind the scenes to understand the logic of all these things and how they're interrelated to one another.
I know, Chuck, you and I had a discussion in a prior episode of the podcast about, we live in one world globally. And yes, the U.S. has been cutting back on carbon emissions, but the rest of the world not necessarily has.
No, we in the show that we did here, last summer, we showed a graph that showed how the U.S. has cut back its coal, which is the dirtiest of the carbons,
Right.
where we have cut back dramatically. You watch the chart where it went up and then it dropped down. But the world consumption kept going up at the same pace and using more and more because China they used up our savings plus put some more in, which means their cost of energy, which that was the cheapest cost of energy, their cost of energy for all their industry and their production drops while ours goes up. Because the other alternative energy sources are more expensive, which means the Chinese industry is more competitive and ours is less competitive. And there's only one air bubble we all live in. There's not the Chinese bubble and our bubble where we can be good and they can be bad and they'll suffer. If they don't agree to cut back, it's worthless, if you have any common sense.
Yeah.
So all we're doing is allowing them to take over more of the world's manufacturing and grow, while we don't, because we're quote setting the good example.
What I'll be interested to see is, we're coming in, everybody automatically sees it at the pump, right? The price of gas. But now we're coming into the busy travel times of the year. Interested to see is consumer behavior and travel behavior going to change. And now you're finally seeing, that we've had these high gas prices for long enough. Now they're starting to show up. The ripple effects are showing up in airfare and anything that shipping costs.
Fuel costs are a big part of airfare.
Yeah.
And you've missed the concept of housing. Look at what housing has done. Pittsburgh's a conservative market. It doesn't usually have big bubbles, and our prices have gone up like 20%. You look at places in the country, hot areas of the country, and they're doubling it over a year, and all of a sudden houses, young people, they can't afford to have a house. And, so there's an effect there, and that causes people, if all of a sudden you have an extra $300 a month gas bill, that's $300 less that you have for a mortgage. And the savings, the government subsidies have slowed down and pretty much
And
come to a
interest
halt.
rates are starting up.
Interest rates are going up, and the savings have been starting to be depleted again. You put all these things together, and you're going to start to see energy costs be a negative pull on the economy and pull it down. And that will tame inflation to some extent too. And that's where the Fed's going to have to monitor very closely how the one affects the other, so they don't do too much or too little.
Right.
Now, they've obviously done too little the last year, Now what they have to be careful of is with energy costs, if they stay this high and somebody doesn't bring it back down, then they gotta be careful how much of a slowdown they put into the system.
Right.
Yeah, all those things have effect, and I think there's a delay in recognition, as you're saying, because both we had a lot of savings, but more so, the prices, the wages that people are making because of the shortage of labor, again, supply is down, demand is up, so the cost of labor has moved. And labor did move up a lot. And so people had more disposable income than they had before. And well, so where prices are down and their wages went up, they had a lot of more disposable income. Well, now these are raising back up, and there's not the imbalance there, and now all of a sudden, ooh, I don't have this extra money at the end of the month like I had before. And all that affects us.
Yeah, and even in the business supply chain side, we've actually seen some of the commodities prices start to stabilize and in some cases come back down a little bit. But now you've got the logistics costs to get the actual goods because of fuel and energy prices. So, this supply chain issue, I don't see it necessarily fixing itself right away either.
Yeah, and this isn't transitory. Things like when we talked about lumber. Lumber can be transit. You can have like a huge hurricane and a big area needs to be rebuilt, and all of a sudden all the lumber shoots there, prices move up, but it's temporary. These wages and the roll, when it starts to roll, costs go up, then wages go up, then wages go up, then costs go up, and it rolls. That's not easy to stop. That's not transitory. That's a cultural change in the way people are thinking. And ultimately, productivity and efficiency is what makes the value, not just raise price. Because you just raise price with no productivity increase, well, then costs will go up accordingly, and they'll just keep going like this. And that's inflation. That's why the Fed's got to slow things down.
So Chuck, we've talked about kind of inflation in general and the impact that the energy sector has on that. With our clients and our audience being mostly small businesses, I'm interested in your take on, how do they really find out what's really going on in the economy, and how do they make sense of it?
Well, I think if you look at our discussion in the last 20 minutes, a small business person has to start to do their own analysis as to supply and demand and think through this to anticipate what's going to happen in the future. What really makes it challenging in today's world is leadership. And leadership will say something and then act differently. For instance, when it comes to energy costs. Now, obviously, people are going to be upset. The longer energy costs are this high, the more they are going to be upset. And that's going to equate to votes and things like that. So you look at what's the president say. The president says, I'm going to reduce rates by costs by opening up the strategic oil reserves and promote drilling. Well, first of all, the strategic oil reserves is like me saying, I'm going to give you a glass of water, now fill my backyard pool with it, and by the way, the strategic oil reserves represent 1 cup of water. So it's almost like a stupid thing to say. There's such little effect between the supply and demand that it says one thing, but does it really mean something different?
Right.
I mean, this administration has said, I don't want this carbon source to be used and relied upon. Well, in the short term, you're going to have to if the supply is going to come up. So are you or aren't you? Which one? You can't have it both ways. And so when you're trying to make a decision as to what's happening in the future, it's almost like you have to guess, because what they say and what they do are two different things. And that lack of transparency, that lack of trust in what people say, makes it very hard to work with things, because you will routinely see people say something they want to hear wants you to think a certain way by giving you part of the facts but not the other facts. You didn't hear the president say, I'm opening up the pipelines. I'm pushing out the federal leases that are really lucrative so somebody can drill at the price now and really make a difference. There are things he could do that really would send a message. What he's done is send a message with those that are knowledgeable in the industry know it meant very little. The thing that's going to drive this is the price.
Yeah.
If the price is high enough, these detriments can be overcome and you can still make money, and then people will kick in and do it. And so you're trying to guess at how much are they going to be restrictive or not. We're in a lending environment, and you know how much the regulatory environment affects what goes on. Think of what happened in the COVID situation. The regulators came to the banks when COVID first hit and said, we are not going to force you to not recognize income and or have special reserves if you help your people by going interest only or letting them defer some payments till the end of the loan. And all the banks did it, and you saw almost no failures occur during that period of time. That's never happened that I can recall in my lifetime. Normally, when somebody gets under stress and they don't make a payment in a certain period of time, you stop recognizing income and you're almost forced to go into foreclosure mode.
Yeah.
Well, because the government pressure came in and said, don't do that, we want to help this time, it made a difference. Now that restriction's gone today, or that help is gone
right.
today. Now they're saying we're back to the old rules again. So now banks are going to be more restrictive. Well, you're trying to anticipate, and you know what a huge difference that made. We would have had 25% of the businesses in foreclosure had they not done that, and we would turn the whole world upside down. Look how important a tool that is. That's how important government can be with regard to adjusting to inflation, making the right decisions. And the problem here is people aren't honest about what they're doing. And I get it. You know, if you're the president and you've got the environmentalists saying don't do it, and you've got other people saying do it, you're trying to walk a fine line. The problem I have is instead of being honest and saying, right now this is more important than this and this is what we're going to do, they don't say that. Right. They try to say what both sides want to hear, and in the process you're misrepresenting the truth because it can't be both ways. That mindset in leadership, and it's not a Democrat, Republican, it's across the board, that makes it very hard to anticipate.
And we're getting deluged with it right now. I mean, we're coming up on midterm elections and state governors races, and you know, we're getting the spin every time you turn TV or the radio on.
Well, sure. I mean, it's like you hear Joe Biden spent some years here as a young child before his family moved out of state. But in the ads, he calls himself a Pennsylvanian, but he hasn't lived in Pennsylvania in 50 years. Okay? You've got two Republican candidates who are running for the U.S. Senate in Pennsylvania. Dr. Oz lives in New Jersey. Well, conservative people don't typically get elected in New Jersey, so what do? You run to Pennsylvania. So you're representing Pennsylvanians when you really never lived here? And his biggest opponent grew up in Pennsylvania, and I believe was a resident of Connecticut, and now he's come back to run because we all know Connecticut's not electing a conservative senator. So if you want to be senator, come to Pennsylvania.
Yeah.
Well,
whose best interest do they have at heart?
Yeah, are you representing the Pennsylvanians or New Jerseyans or whatever? Because that's
yourself.
where you really lived, or yourself. You're not representing us. You don't even live here, and yet you don't say that. Again, people. And I'm not saying these are bad people. They're not bad people. It's just they're not completely honest with everybody out there. Does anybody publish that they really haven't lived their life in Pennsylvania? How do you think the Pennsylvania voters are going to feel about that? This is not. There's the honesty and the integrity that should be in leadership is clearly not there. So in the small business world, when you're trying to anticipate things, you know, if somebody said something, pro or con, to your position, and they stood behind it, well, then you can anticipate what's going to happen. But when people try to make everybody happy and misrepresent the truth at the same time,
To everybody.
it makes it extremely hard to predict what's gonna happen. So honestly, in this situation, I don't see energy adjusting because they're not doing anything to help the supply.
Well, now you have
the price, when it's up
Yeah.
over $100, supply is gonna start to crank up.
Yeah. And now you have the noise of this Eastern European conflict that's just
Yeah.
more of a scapegoat for them on the energy.
Sure, that had
Prices
very
of it.
little to do with what's going on in the price of energy. It had more to do with people coming back from COVID and starting to spend and the activity
Right.
levels kicking up on a worldwide basis. But again, that's a factor too. If you get another round of COVID that slows it down dramatically, that's a factor that has to be considered. It'll change the supply-demand ratio and relationship. That's why there is no white and black and set formula. That's what makes it very hard for the Fed and other people to make a specific plan to work it out. And you couple that with the administration's not really saying what's really going on, and it just makes it a very hard set of dynamics to predict where you're going to be. Right now, I don't see a whole lot of things changing. I see the Fed going to have to push up rates. I see energy prices going to start to drop down as supply kicks in because of how high the price is. And those two dynamics are going to, I don't know that they're going to pull inflation back a whole lot, but they're not going to let it.
Well, and as we talked
Grow
before, some of this banked money, the savings is going to eventually be depleted too.
Well, there are so many factors to look at. Even your immigration policy. We can't get people to build houses. We need houses. That's why the cost of housing is going up so high, because there's not enough supply. The demand outweighs it. Well, if you can't build it, then the supply's not fixed. And if you tie down immigration that people can't come in and work, then it doesn't help
Right.
the situation. And each one of these is a microcosm in the big picture, and they all have different amounts of degrees of affecting the big picture. Honestly, a small business person, it's very hard for them to anticipate what's going to go on. They're living what they see and touch. They know what their wage pressures are, and they know how hard it is to find somebody, and they know how much they can raise their prices, and they'll keep pushing and pulling to try to keep a balance to survive.
One thing we know, interesting times.
Very challenging times.
And we will try to provide as much feedback and as information on where things are going.
Well,
in the
honestly,
small
that's
business
what
community.
makes
Yeah.
banking one of the most wonderful businesses that you can have. For me, years ago when I was the chairman of the Bankers Association, everybody was upset about some challenging times. And to me, I look at this and say, this is where we get to shine. This is where our small business people need help, and this is what we provide. We are here to fix those issues and be the backbone of helping them get through these challenging times. And it's fun when you get to see somebody's business be saved because I can come in and help you, and then you see all those jobs protected and people taking care of their families because we're there. That's what makes what we do so worthwhile.
It sure does. And thanks again, Chuck, for the insight and input, and I'm sure we'll be talking again here in the future as things shake out. But for those of you that have any questions or comments regarding Inside the Vault, you can email us at insidethevault@enterprisebankpgh.com, or you can check us out on all the major podcast platforms as well as video on YouTube. Thank you for joining us. We really hope you enjoyed today's episode of Inside the Vault. As always, please be sure to review and rate us on all the popular podcast platforms. And if you have any questions, comments, or suggestions, please email us at insidethevault at enterprisebankpgh.com. Thank you.